Hey, good morning, small business owners. Welcome to Monday Morning Metric. My name is Rebecca Berneck, and I am the founder, CEO, and big head of Office Heads. We are a financial management company located in Evanston, Illinois. Every Monday, right around 10:30 Central Time, I jump onto Facebook Live and I chat about all things financial and running a small business, operating a small business. How do you grow your business through the lens of your finances? How do you read your financial reports? You name it, I talk about it. It is my passion to help business owners grow their small businesses. So today we are going to talk, this is actually part 2 of a little mini series because it is fourth quarter and there's no better time than now than to budget and prepare for the next year. So last week we talked about how to forecast your sales using historic information. Today is part 2, which is how do you then budget your expenses to have a full budget, so then you have your income coming in and your expenses going out for the next 12 months. Okay, so I'm going to repeat a couple of things in case you didn't see that first Monday Morning Metric. And oh, by the way, you can scroll through your Facebook, or all my Monday Morning Metric videos are on my YouTube page. So we'll include a link to our YouTube page in case you ever want to go back and take a look at old Monday Morning Metrics. So I'm going to remind you first that the first thing that you do, and we here at Office Heads use the Intuit product. So I'm going to use the example of QuickBooks Online. We need to have a template. So if you did this last week, I'll be quick, but what you're going to do is you're going to export a report from your QuickBooks that you can use then to create your budget. So you're going to go into QuickBooks, you're going to go into reports, you're going to go into your profit and loss. You're going to change that profit and loss. You're going to configure it differently because you want it to be this entire year, and you want it to be by month, and you want to run it on a cash basis. So you take a look at that top bar of your P&L statement where it displays. I'm not sure if you ever look at that, but you can slice and dice your P&L in various different ways. And so in this case, because we want to see trends, we want to see your revenue and expenses on a monthly basis. So you're going to change it to 12 months of the year. Even though we're in December and it's a partial year, that's going to give you a template for all 12 months. And then you're going to view it by month. So you get all 12 months. And then you're going to run it by cash and not accrual, because that helps with your cash flow. It'll help you to understand whether or not you have trends, or or your company is seasonal. Maybe you know that by gut. Now you're going to prove it by numbers. Now, of course, I have to mention that caveat that we're assuming that your bookkeeping is up to date and you've reconciled every month, because you don't want to be running analysis on incomplete or inaccurate books. So that's the importance of bookkeeping and keeping that information, so you have really good reports to use for future planning. So now you have this report, there's a little button, and you're going to export it into Excel. So this gives you a beautiful template in order to change your numbers and swap it on out. So for those of you that already have their template, excellent. We're going to move forward. We're going to talk about cost of goods and expenses. So cost of goods are the direct expenses associated with your revenue. If your revenue goes away, those expenses go away. So if you create, if you sell widgets, and in order to make those widgets, you need paper and glue. If for some reason you stop selling those widgets, you stop purchasing paper and glue. If you're a service business, it's going to be your direct expenses. It's going to be your direct labor. So as Office Heads is, we do bookkeeping and accounting. In our cost of goods, we have direct labor, we have contractors, and then we have digital tools. Because we sell digital tools at a discounted rate, we have to pay for those first. So we have that in our cost of goods. But for both cost of goods and expenses, kind of the same thing. You're going to look at that template and you're going to see what you did in the past 12 months. What did you do last year? And then what do you think you're going to do this year? So you're going to use that knowledge and go line by line through your profit and loss statement in each of your categories and say, what did I do last year? And what am I going to do this year? Well, last session, Monday Morning Metric, we talked about revenue. And hopefully you said, my revenue is going to go up by, I'm going to double, I'm going to go up 10%, I'm going to go up 1%, I'm going to maintain. Whatever that is, the first question I always like to ask is, well, how are you going to do that? And what that, in terms of operations of a small business, that's on that sales and marketing side. So if you say that you're going to double your revenue and plan on not spending any marketing dollars, this is where they say it takes money to make money. You need to get out there. You need to get your name out there. You need to be marketing, PR, social media, whatever it is, so people know that you're there, and then your revenue will go up. So as you take a look at your planning in terms of your revenue going up, what are the associated marketing campaigns that you are going to do in order to get that revenue up there? Lots of different ways that you can market. You got to do some marketing unless you've got this magical, wonderful business that that new sales just pops up. Congratulations. Let me know how you do it. So now you're going to look at that marketing budget, right? How much are you going to spend on Google ads? How much are you going to spend on blogging and anything that comes with getting your name out there? Because that is going to pump up that revenue that you planned on increasing. So after marketing and sales, the next thing I like to look at is your human capital, your people. Because if you're a service business, and OfficeEd specializes in service businesses, if you're a service business, you probably need to hire more people, the higher your revenue goes up. So looking at your historic information, you should know what your direct labor percentage is. That's easy. You divide your direct labor by your revenue and you get a percentage. You can see over time what that percentage is. That is a really good metric, a KPI to use. OfficeEds, being a service business, uses that all the time. So I've used this example in previous Monday morning metrics. For OfficeEds, 33% is the magic number. So 33% of all my revenue is paid to my people who perform the bookkeeping and accounting services. So as I plan and my revenue goes up and I see that that 33% is changing, that is an indicator on when I need to hire. So as a matter of fact, a couple of weeks ago, I did OfficeEd's budget, and as it increased, it looks as though I might be hiring someone. If my sales go through, I might be hiring someone right around May and then right around fourth quarter if I go out there and sell. Next, after you have your people who are providing the work. So, in a future Monday morning metric, I'm going to talk about your chart of accounts and how to reorganize that, because we like to bucket our various different line items in our chart of accounts by specific department. So I already mentioned the business development, sales, marketing bucket. Now I mentioned the HR or the payroll and benefits bucket. Next is operations. Now, some of these can remain the same. The metric does not go up with revenue. For example, rent. Maybe your revenue can go up, but you don't have to expand. So a lot of these might stay the same or have like a 3% increase based on the cost of living. So every single line item you're going to go through and say, hey, does this go up? Does this go down? And if so, which month is it going to increase? And rent is a good example because my rent goes up in July. So I know I'm going to go look at my lease and I'm going to look at my budget and I'm going to increase that amount exactly in July moving forward. So knowing how your business operates and that operational piece is really important to be able to forecast what your expenses are. So after that is going to be general and administrative. So anything else that doesn't fall under sales, marketing, and business development, payroll and benefits and operations falls into general and administrative. Those types of things are business, office supplies, insurance, bank fees, which you shouldn't be paying any bank fees if you're watching your cash flow. Anything else that just kind of those expenses that you need to pay, but they don't fall into a certain bucket are in your general administrative. So again, take a look at all those line items. One might be accounting. Are you going to do your own accounting or are you going to outsource it? One might be legal. Do you need to do anything, update your contracts or anything on the legal front? There's a lot of things that you can sit back, and this is when you put your CEO hat on, right? What did I spend last year? What am I going to do this year? What has changed? How much is it going to cost? When can I put that money in there? When can I afford it? Looking at all my cash flow. So this is the exciting piece, right? So now you've forecasted your sales and you've put in a budget, which a budget isn't restrictive. It's just a roadmap of what you're going to do next year. So then if you use this template that you exported from QuickBooks, it automatically calculates. So you look at that bottom row and it'll tell you month by month, if you meet your sales goals and if you spend the way you plan to spend, are you profitable or are you going to experience a loss? Now, some of those months you might experience a loss because you might say, okay, I need to hire somebody and that's going to cost, I have to pay a recruiter. So boom, it spikes up in that month. But you might be profitable for the few months prior, so you're saving for that expense. So just because it might be a loss doesn't mean it's a bad thing, as long as you know the story behind it. Now, of course, every month being profitable is even better, but we're running small businesses here and we know that sometimes it isn't always perfect. So there you go. That's my story about budgeting. So we have the forecasting of sales, which is the money coming in. line item by line item, look at what you did last year and estimate what you're going to do this year. Maybe you'll spend less in certain areas. Maybe you'll call up some vendors and say, hey, I need to renegotiate my contracts here because this isn't working for me anymore. This is a really good time to take a look at how you're operating your business, because what you really want to do is operate a financially healthy business. Now is a great time to create that roadmap, which is your budget. If you have any questions, please comment below. If you have any other topics you want me to cover, please comment below. More than happy to pick a subject that you guys want to talk about. I'll put some links into some information for you to help you with your forecasting, your budgeting. But please take some time in this busy holiday season to relax, sit back, and think strategically about your business so you can have a great and profitable 2019. Have a great week, and I'll see you next Monday.